Well, the Howard Hughes Corporation, this is an owner, manager, and developer of different types of real estate throughout the U.S., has hired bankers at CenterView to explore strategic alternatives that include a sale of the company, according to people familiar with the situation. The company, a one-time spinoff from General Growth Properties, has struggled of late to command a valuation that the board, led by its chairman Bill Ackman, feels is appropriate for a company with a collection of assets and performance metrics of its type. Now, people familiar with the board's thinking tell me it's unclear the company is well suited to the public markets because, unlike many other real estate companies, it's not a REIT but a C Corp, and it has a diverse collection of assets that does not lend itself to the recurring and predictable cash flows real estate investors may be looking for. The company is both an owner of land, such as 60 acres of beachfront in Honolulu, and a developer of residential communities, such as the Woodlands in Houston, and commercial developments, such as the South Street Seaport, only a few blocks east of the NYC here in downtown Manhattan, with vacant land, planned communities, shopping developments, self-storage facilities, and even more. The complexity of this corporation and the longer-term nature of its ability to profit from those holdings may not be best for the public markets, at least judging from the stock's performance over the last 3 years. You can take a look. It's down more than 14%, while both builders and REITs, well, they are far higher. And that has led management and the board to explore a sale, though its bankers are also, I'm told, exploring joint ventures or spin-offs as part of their mandate, again, according to people familiar with the situation. Now, the bankers do hope to complete the review process by the end of this summer. Mr. Ackman, who controls roughly 4 to 5% of the company when you include derivatives through his hedge fund, is said to be fully supportive of the plan to review alternatives. He did not return calls for comment, nor did representatives of Howard Hughes. Potential buyers for Howard Hughes, well, they're likely to include giant real estate holders such as Blackstone or Brookfield Properties, but may also include some of the largest family offices out there, or even some sovereign wealth funds, some of whom are seen as willing to patiently try to harvest a net asset value that analysts who follow the company mark as between as high as 130 to 170 a share. Now, on a bullish note out just this morning, analysts at Citi, for example, note the stock's underperformance. They tie it in part to a slower than anticipated lease-up of the space at the South Street Seaport. But this is an interesting one, guys. We got the stock now up about 10%, of course, on our story of this review of alternatives. But it is this collection of assets that is not necessarily one thing that may not be attracting a shareholder base that is enough to sort of, at least they seem to think, reflect what has been success overall in terms of their planned communities, their ability to deliver net operating income and net asset value over time.
Yeah, it definitely falls between the cracks. It's been kind of a favorite of a certain type of hedge fund manager for a long time. It looks at special situations, looks at, kind of some of the parts values, and it would make sense that, before you said Brookfield or something like that, I mean, it makes sense to have these large owners, not traditional leverage buyout, really, because it's not a cash cow type business.
Right, exactly. So it's something you've got to be patient with. But, I mean, 60 acres on the beach in Honolulu, one would imagine. You and I got to get over to the South Street Seaport. I went over there. It's so nice.
Cool. Yeah. So this is the one that lights up rainbow. If you go there at night, they have concerts there. They've got new restaurants, a John George restaurant. I think ESPN has studios there.
But it has taken them some time to get that going. It's seen as something of a drag, perhaps. But that's not what, I mean, it's also the Woodlands in Houston is a very successful planned community. And it's over time that they then sell more land or that they lease more or do other things. But again, Ackman's been in there. Remember, General Growth, which, of course, is probably his best investment ever. This was a spin of it back in, I think, 2010. But it has sort of had a very tough time.